And the Federal Reserve, although has indicated they want to perhaps taper those purchases down faster, and there's been voices on the Federal Reserve that say like we should start thinking of liftoff sometime next year. It doesn't indicate there's going to be any faster path than that at this point. Now, to your question, should they do this faster? That I think really depends upon the acceleration of inflation into the first quarter, because so far this has all been driven by the reopening of the economy, which turned out to be much more resilient and stronger than anyone anticipated, which at some point also should see inflation somewhat abate. So I think this is where the Federal Reserve currently is and where the markets are. You must start with liftoff, but to be too aggressive may not be the right thing to do at this point.
But the US especially, Ben, is going to get such an enormous amount of stimulus from various programs coming out of the federal government. And if Mr. Biden has his way, there'll be trillions more on the way as well in terms of money being flooded into the US economy. Surely this is going to create more inflationary pressure. So this all becomes very political at some stage.
It already has, I think. If you follow the comments by Senator Manchin, who has been working quite diligently the entire year to dwindle down the total package that was released, as you indicate, something closer to 4 to 5 trillion of total stimulus, that the initial package that is probably coming at some point in the foreseeable future of less than 2 trillion, or maybe even down to 1.5 trillion, was all based upon that too much stimulus is too good of a thing. It would be pushing up inflation too much from where we are already. And that, I think, is a political point, as you mentioned, as opposed to the economic side of it, that, well, we do have an ailing infrastructure here in the United States. We do need more investment, and we do need to have a better allocation of productivity across the economy. So the trade-offs here, I think, against picture of inflation. So I think the political aspects are, yes, this is the narrative, and that's what people are looking at. Ultimately, I think the fiscal stimulus that we're going to get will be very infrastructure driven with an aim on investment. That probably is not going to be as inflationary as people think.
What should our viewers do in the markets this week? We've got this wealth of data. We've got retail sales as well, Ben. What is the smartest thing that our viewers can be doing at the moment?
So one thing is to stay invested in the market. I don't think you should be paring back in any way, because as much as that we have another variant and it will somewhat slow down the economy or economies, it's, I don't think, leading to a major shutdown of anything. So the recovery is continuing. So I think you should continue to stay invested. Secondly, yes, inflation is an issue and you should position accordingly. So in inflation-linked securities, or looking maybe in some areas like emerging markets where interest rates are much higher and they're combating inflation faster, maybe interesting opportunities to look at this point.